The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
There, February, my pleasure to be here. Noon till 1 p.m. 877-927-6648 is the number to call. Let's treat this as a technical Friday, even though it's a Wednesday. The E-mini is up 10.50 at 26.72. Plunges early this morning. Remember, 26.72. Plunges down to 26.27. So it's a 50-point move. So what we're looking at here is that 9-period moving average has just been touched in the daily. To me, this is all really important work in terms of seeing a rebound. The rebound has taken a lot of days, and we still haven't taken out the low of right there, that candle on the 8th, with a high of 26.8650. We're still underneath that. And that says to me that this rebound is using up a lot of energy, but it's very important. It is an energy rebound, but sometimes there's wheel slip, or if you've got a clutch that's slipping, you can put your foot on the accelerator and the wheel just doesn't grip. So that's basically what I'm looking at here, usurping strength, but moving higher. That's really the theme that I've got. The MACD is still really ugly. It's going to take at least another 40 to 50 points, I'd say even more, to get the MACD to cross positive. And the S&P is still lagging way down at 32%. These are not technical verifications of strength to the upside, but there is the volatility index, and that's suggesting that it's giving tremendous support to the market. Got that out of the way. 120-minute chart, I'm treating this as an aberration, the break to the downside, because it was news related, but most importantly, it gives me a CA. It's a brand new A, or it's a continuation. I'm treating it first as a continuation pattern in the 120-minute chart. Let me just open this up, talk just a little bit about this. I spent a lot of time for my subscribers to my opening call discussing why we are long and why we're going to add to long positions, why we're long the diamonds, added to that on the breakdown this morning. Why? Because there's enough strength to move higher, but I'm not sure yet how high. So you see this cup with a very bold formation type right side matching time frame, which says by about 8 o'clock tonight, we should be breaking the 2671.50 high. We've done that. And then the 2686.50 high will be a target. I'm not sure it's going to get there, but anyway, this is what the pattern suggests. Let's get out of this because I really want to show you. Here we go. So you see this inside bar in the weekly chart, very ugly candle, plummets down to 25.29. And this morning's low is that this morning's low? I'm not sure. What did I say it was this morning? 20s. Oh boy. There we go. 26.27. All right, and we're trading at 26.52. What's really important about this weekly chart is that we've had an inside bar so far, but it's a bar of not the wick, but of the full candle, the body. That says the 27.10s should be an upside target this week. We'll see. Should and will are two different things. Now I want to go into the nitty-gritties. In my newsletter, if I can just show this here, I like to do different things, experiment with different things. Right now I'm actually experimenting with the RTYH8. That's the Russell 2000 E-mini. It's trading differently to the E-mini, so it's just good to get used to different fluctuations in different indices. What I am looking at here is this is the Dow chart. You see, if you had to look at it, you don't have to. Looking on a cell phone, it's a little difficult, but basically all I want you to see is that, see the move to the upside? So it's suggesting that there is, in fact, a pullback under the 9-period moving average. And if that takes place, it should go deeper down. The MACD is still good, but turning down. The stochastic didn't get above the 80% line and is turning with an M-shaped pattern turning down. On balance volume is turning down. This is upside down. This is the Dow chart, daily chart, upside down. So that is not 80%, that's 20% in real life. On balance volume was very strong for the move yesterday. The stochastic is not giving any real signal other than to say potential for a double top, meaning a double bottom. And the MACD says, hey, we're starting to turn. No indication that it's fully turned, but now we're starting to see some weakness. So within that context, I like to just show different ways of looking at the market. Another thing that we look at every single day for subscribers to my opening call. Here's the Dow chart. And what I said that we've gone to a gray peak A. We need to go above 24,765, I believe it is. Yes, for leg B. The 9-period moving average is still a magnet. It might be tough. And we're long a number of positions in the Dow. And what we're looking at is there's the chart that we were showing. There's the MACD. The histogram's just improving a little bit. Stochastic. This is really shocking action, but it really is based because it's a look back period, 26 period look back. That means it's got all that negativity to overcome. So what we're looking at is the V-shaped pattern in the unbalanced volume. Very good. When I'm looking at the, I believe this is it right here. Yeah, if I'm looking at the 120-minute chart, we're in, there should be a leg 3 in the Chapman wave to the upside above 24,766. And we'll see if that's going to occur today or tomorrow. But there are two fighting patterns. There's the V-shaped pattern, or there's the arch pattern, and we haven't broken that arch pattern yet, either to the downside or to the upside. So I like to show these things. The MACD is very strong in the 120-minute Dow chart. Stochastic is moving up nicely. So that was then, and if we're looking at it now, here we go. This is it right now. Here's 120, just sideways trading band. Here's the 120. There's the histogram for today. It's improving a little bit, still a weak MACD. Stochastic's just a little bit better at 32%. It's really not showing all that much. So let's get out of that and we go to the nitty-gritties, run numbers. So we've got the Dow now down 4. It had a 100 and something point decline, and that held very nicely. But until we're over the 9-period moving average of 24,780, closing above it, this is just a bounce within the context of an very oversold condition. The weekly chart says the same sort of thing. The S&P right now, SPX.X, is showing upward bias. It really is strong. It's up 11 at 2674. It has, in fact, started leg B, gray leg B. All right, so we've got a bunch of things. Of course, everyone's, I'm sure, waiting to see what's going to happen when we look at gold. Where's the dollar? Where's gold? Where's silver? What's going on? That CPI inflation number was a little more than was anticipated. We've been talking about that for a while. When it comes, it's going to be pretty strong, I think. We'll be right back. Dow's up 5, S&P's up 11. Basil Chapman, Tiger Technician Zone.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, let's just go through this again. The E-mini is trading at 2670 right now. It really needs to get to the 2678s. I would even say until it can break decisively above 2681. It's just stuck in this range. And on the support side, it's at 2670, 2665s. It's really very important support to hold for the day. All right, let's go back to our nitty-gritties. So the S&P has a 2703 ready that it needs to break out of. It's at 2671 right now. That's a long way to go. And on the downside, any closes, the daily chart below, I'd put it right here at about 2628. Would be, that's way down. 2648. 2648 has a lot of points, but changes dramatically. I'm just trying to give the bigger picture right now. The QQQ, the QQQ NDX 100 trading vehicle, trading at 160.94, up 124. So the Qs are up 58 at 7,072. That's a big move. This is actually still leg A, very strong, helping the candle in the weekly chart. Parameters to watch here. 163s. It needs to get to the 163s within about another few days, because if it breaks under 157, closes under 157, I think that's going to become a problem. The IWM was fascinating. See, the Q's up 1.16. How much percent is that? It's about I missed it. 0.70. And the IWM is up 1%. IWM today is much stronger, and it does that every once in a while. It could even be that because of the inflation numbers, this is the sector that is actually benefiting the most. So nice candle, and I suspect 146 is really the level to watch on the downside. 151.50s on the upside, and that's a breakout to the upside in the shorter term, that is. Questions I go. Let's go to gold. Gold up 19 at 1349. Yesterday I was saying gold has to get really above 1335-ish, and then it's going to be impressive. This is impressive. It's impressive because it's a response, first negative and then very positive to the inflation number. The weekly chart needed this desperately. I don't like desperate. So it's where gold closes today, Wednesday, where gold is trading at 4 o'clock on Friday, probably 1 o'clock on Friday, but let's go to 4 o'clock Friday. If gold gives back some of this and goes to 1342, and the dollar, which right now is down sharply, down 36 at 89.34, is able to rally back to about the 89.63 area, then I'd say, you know what, choppy range, dollar most probably will break to the downside, but it could be a slow process. Gold could break to the upside, slow process. But if today the dollar closes much lower, closes at its low, and I'd say between 89.35 where it is now, and it's at 89.10, and gold actually has another surge to the upside, that's going to be very important. It improves the weekly chart tremendously. It makes this cup formation more viable. It says I can start looking at a left side, right side price time match again. And it says that monthly chart should go to leg D. That D will be above 1372, the high of September of last year. Not sure why I've got a frog. All right. Crude oil. Crude oil, just steady, up 20 cents at 59.39. It's had its big move to the downside, trying to hold above 58. Let's see how that does. The monthly chart still says, not bad action. The weekly chart says, uh-oh, that's a real problem. Like 61 to 62, really strong resistance, but a break below 58 says, uh-oh, trouble. So now let's go to the EUR-USD. Just get these out the way. Yeah, very nice move to the upside at 1.239. Very strong. That's helping the weekly chart, suggesting it's going to go to a leg C. Good action, USD-JPY. This is the yen. Should be breaking down, and it is. Breaking down way below the left side trough from 2017, and is breaking the uptrend resistance line in the monthly. Okay, let's go to nitty-gritties. So question comes in. Sean, do you ever buy out-of-the-money calls based on your trend gauge? I tried it this morning just to see. Real cheap SPY calls for Friday. Figure if it worked 3 out of 5 times, it would be worth a shot. Just a test. Sean. So, this is a technique that I developed a long time ago. These are numbers that I never discuss. This is my 5 quadrants. I'll have to call them my 5 quadrants. And right there is the daily trend. It's Richard Arm's trend gauge. I just use specific numbers. The numbers are certain level high. I talk about them. And if, yes, okay, I'll be there in a minute. And if it's too low, I talk about them. If it's very high, it says within 2 days, it should be at least a 9 to 11 point futures move on the upside. And that'll help the S&P and dollar and Dow cash. And if it's to the downside in a specific way, it says the very next day should see the Dow down, and that's exactly what happened yesterday. It's got a huge success rate. So let's do a couple of things here. I'm going to just go to this chart, show you the patterns that we were looking for. So Sean, the answer is you can use it on the, but sometimes it has to go lower before it goes higher. I've actually never used it. I have put in positions, but not used options at all. But yeah, tell me how you think it works out, because it's something to look at. But the futures have to go much lower. No, if the trend is very low, then you're looking at the very next day on the Dow. So keep that in mind. We've got many other questions going on, but let's see. Do we have a question? Do we have someone in the waiting there, waiting online? Do we have a person waiting online?
Hello, Basil. This is John from Philly.
John from Philly. How are you?
I'm very good, thank you. Thanks for taking the call, Basil. I had a quick question for you.
Yes.
Regarding the S&P Futures daily chart, please, and the 9-period EMA.
Yep. Yes.
Quick question. Thank you for reviewing what your current stance is and what you've advised your clients to do, and that was including, I heard you mention you had taken in the past day, 2 or 3, a couple of small long positions. Basil, years ago, you taught me and when I was a new student of yours, the value of the 9-day EMA, especially in a trending market.
Yes.
So my very specific question is this. The S&P and its futures fallen nicely, now bounced back nicely, and come right back up and kissed a declining 9-period EMA.
Right.
If this is a downtrend, we'll repel here and head lower from this test of the 9 EMA. What is it you see that says longs are in order and that we're likely to get back above the 9 EMA, please?
Okay, that's a very good question. Johnny, you going to hold on, or are you going to listen through the den?
I will hang up and listen, and thanks for the answer.
Okay, so I'll be discussing this, folks. You can see this lowercase h that I've drawn in on the daily chart of the S&P. This is the daily, weekly, monthly on the right. I'll be right.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. So let's just take them right away. The questions, they've been piling up. So I'm going to do this. There's nothing to dwell on here. The 9-period exponential moving average. Look at this black line, the 9 EMA. What a magnificent walk that the S&P took in the daily chart. Once it closed underneath the 9-period moving average since it broke out way back somewhere around the 16th of November. And then 2 days in a row, it gapped down after the high of the 26th at 28.72. It breaks down, and from that moment on, it's had 1, 2, 3, 4, 5, about 14 or 15 sessions since the 26th of January, and has yet to close above the 9-period moving average. It touched it today. So why do I consider it important? I treat it as because it deals with the last closing price. It's the way the mechanism of the arithmetic is put together. The reason why I like it is, look how often it gives you the exact low of a price or the exact high of a price. And it says to me, in my work, that's what I'm really looking for. We're just counting peaks and troughs. So I want to see what, I love to look at this and say, this looks like the little cable car, and that's your line of resistance, and the cable car just can't flip upside down. It ain't in one of those sports events in the Winter Games. But on the way up, it walks that, and here it was running the 9-period moving average. Make it simple. You see the pattern of this moving average, the 9 EMA. You see the pattern of the stock, this is the S&P. You see the way it made a very strong low to the 200-period moving average and then rebounded. Look at the green line of the MACD, the 9-period differential. It's following very closely, except that the histogram, the vertical bars that are telling you the distance between the slower moving average and the faster moving average are moving higher, but they are way at -8. They aren't even close to 0%. So that says a lot of time and price is going to have to be used to get the MACD to cross positive. That's the time that I think a lot of this time is going to be in this retracement. When it finally gets there, I think it's going to make what I call a divergence. I think it's going to deflect lower. And that's where we get our H pattern that is going to get the price to come back down. The stochastic has taken all this time from the low and it's still only at 31%. It should be up at about 58 or even 68% right now. And it's not. And that's telling me the look back period has used up a lot of energy to the downside, and then energy is being spent by trying desperately with these green candles to move higher, and at some point it'll just click and both will start to move higher. But we've got to watch that 9-period moving average, which right now is resistance at 2685s, and we're at 2676s. So John, I hope I've answered that question in price, not necessarily in purely technical terms based on the 9-period moving average, but on what it does for me. Way up here at 2711 is the 9-period moving average in the weekly chart. So I hope that give me a call tomorrow if I didn't answer what you were looking for. So Sean, the answer to you with the using the trend gauge is yes, you can use it, but it's the next day. It's the next day for for the very low trend specific numbers I'm not giving, and for the high one you got within 2 days. So I'm not sure how you're going to do it, but you've got to get out of your position if that's the way you do it, because you've got to get out within 2 days. Next question was UNP, that's from yesterday, I never got to. Union Pacific call, nice candle today, leg B in the daily up 3.58, UNP 131.90 up 360, very good action. This is telling me the reason why I wanted to go long many positions here, and we still have our short positions, is because there is a chance, based on something that I'll give my subscribers in another couple of days. I just haven't had time to spend on it. I still would like to see this week's action before I really feel convinced. I want to take time to do the full analysis. There's a chart, a monthly chart of the Dow that replicates really well what we've just had, and in fact many of the socioeconomic conditions pertaining to this particular period. I haven't given, I said I would, but I said I want a little more time, and that says to me there is a possibility that we take time to rectify. We have the internal low, but we have a higher residual low in the Dow within 3 to 6 weeks, and then we continue higher. I'm not ruling that out. The rotation will correct things and the steepness of the decline. I'm not teasing. No, that's just the way it is. So the question yesterday was, and I didn't get to it, Bob wanted to know, 12:20 to 1:05 p.m. How do you know the the market would go up. You know, this is one of those things that I've just done so long. There are certain numbers, certain techniques that I instinctively do it. Instinct doesn't mean that you pop out the womb and you know how to trade the volatility index. It means that it's over the years, you just build this methodology internally, and you can't always extrapolate the information to discuss it. So I'm going to say, let me think about answering that, other than to say I knew it wouldn't be as early as my usual 11:10 a.m. Eastern time, that it would have to be later. It couldn't be too late and it couldn't be too early, and bam, it was exactly on the button. Thank you. I don't know what to say. It's just one of those things. I'm almost embarrassed to say that I'm not able to fully analyze it, and hopefully over the next day or two, I'll try to analyze it. Next thing I had was my thoughts on the VIX. I think that's important. As I say, I'm going to treat this a little bit more like Tactical Friday. So the VIX index, the type of move we had just based on rates was some kind of an aberration to scream to the 50 level, 50.30. And if you look at these various spikes in the monthly chart of the volatility index, and believe me, if you listen to Kevin Hinks just a short while ago in the previous program from Think or Swim, talking about the VIX index, he made it as simple as he could. I actually make it even more simple than that, because I just use numbers. Holding in the teens is not good. Holding, having gone into the 20s or higher, says that there's a real good chance that it's going to take quite a while, and I do mean a while, before you can get that kind of spike on bad news. So here we are, China plus U.S. interest rates back in August, I think it was, of 2015, spikes to 53.29. Even there, I see, now that's not the kind of Greece and financial crisis that we had back in 2008. Anyway, it spiked to 53.29. Now it spiked to 50.30. I suspect that the volatility index is going to start coming down. That's going to buoy the market. It's going to give support. It doesn't tell you how high you're going to go. Look at this monthly chart, the weekly chart. Don't tell me that on Friday the VIX is going to close again under 16.16, the 9-period moving average. Wouldn't that be incredible if it did that? And if it does that, this market will sustain an up move. Basil Chapman, Dow's up 53, S&P's up 17. I'll be right back. Got a lot more questions to cover. And we've got a question that I wanted to get to about one of the stocks. I'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, so let's just do this real quickly. So the question about... So this is Caterpillar trading 155.44 up $1.47. See, this is a bounce. This is not what you'd expect. Caterpillar was a leader. Now it's just having a kind of an afterthought bounce. It needs time. I believe that's an H pattern that I could draw in right here. So I would be looking at Caterpillar to be one of the clues to say this particular rally is going to fail in certain parts of the cyclicals. And the only way I'd be able to tell that is if it broke the base level of support in the 142s and is trading at 155. It could take quite a while. If Caterpillar climbs to the 165 level, I think it's going to be tough to do. But let's just say it goes to 165. That would say a bulk of the consolidation has been done. The weekly has had the biggest decline in a very long time, certainly in points from the 174, was it? 173.24 level. Back in the week of the 26th of January to 142, so 30 points. Yeah, I would say that that's 18-19% correction, and still a leg D in the week in the monthly chart with good technicals. That's the way I'm looking at these. Question about the, this is interesting, Sarah. TVIX, I have it on my daily list for my subscribers. We just have some indexes or stocks or whatever every day because they kind of market benchmarks we use. And I said 2 days ago, I'd love to be shorting the TVIX. I just didn't want that risk right now. It was in the 10s. Now it's at 9.10, and I think it's still going to go lower. Yeah, I don't think it's just difficult. I mean, like this morning, the sell-off, you had no idea whether it would last or not. You had an idea pretty soon after it made the low, but during the decline. So I just don't really, we've got some stocks that have done nicely. So, we have a small stock now we've got 2 positions in, and it's gone from the 168 and 173 level to 175. That's a huge percentage gain. So I don't want to play this on the downside, even though I feel quite confident to say that the TVIX, at least in the shorter term, should be going down to the 8s and maybe even the 7s. But I don't think it's worth the risk. Crude oil, question about the crude oil. Crude oil, I think it's trying to find a base here in above 58. But if it closes below, let's give it between 58 and 57. If it closes into 56, that's it for crude oil in this phase. It's going to have to take a lot to regain that upside momentum. So I hope I answered that question. I hope I haven't missed anything. HG, copper. Look at that move in copper. So as I said, we're fortunate we have a copper stock that's doing really well right now. I like this, and that's another reason why I had to mention that chart that I found that suggests there is a chance that the top that we made on the 26th, 27th, 28th, 9th of January in the different indices, and the very sharp pullback is, I don't know if it's a top or the top, at least for this phase. I don't know whether the low that was made on Friday and Monday of this week and Friday of last week, if that's a low or the low, but I am very consistent saying I believe we made an internal low. Sometimes you have to wait up to 6 weeks for the residual low. Sometimes it's much quicker, but I do say that I'm now looking at the rotation through the sectors. It was really important for me to see copper moving like this. It's up at 3.22. It's up 0.064. That's over 2%. This is a big move. If it takes out on the left side, this candle here of last week, the 3.257, I think it's going to test the high that was made in December at 3.3220. That's going to be big. A failure would say it goes back below 3.15, and it's at 3.227 right now. So yeah, this is going to be important. The next question is the Nikkei. Nikkei, NK, as I say today, we're all over the place because I've got a lot of questions. So Nikkei is not doing anything. It made a peak E in the weekly chart. It's an E in the monthly. And the reason why I'm not going to back away from saying these monthly charts are really important. First time in ages that we've got D's, E's, and even F's in some of the monthly charts. And that's the reason why I don't want to ignore the fact that we could make a lower low. I don't want to ignore the fact that could turn out, if you look back in 4 months' time, and this turned out to be the low and we start to make higher highs, we could look back and say, hey, that's either a recycle or you're going to an F, and that could recycle, or other things can happen. Remember, at a peak D or even an E, other things can happen, and that's really what I'm looking at. It's the reason why I'm looking specifically for my subscribers, what's working, what's not working. Let's try our best to be in what's working. Look, the semiconductors are up nicely today, but boy, after the move from 108 down to 93, to only be at 100 right now in leg B, they need to be much, much higher by Friday or Monday or Tuesday of next week. You're going to see these SMHs at somewhere in the 103.50, near 104 level. Then I'm going to say, you know what? This could go on, chop, 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 with an upside bias for a little while longer. So let's just deal with what we've got. Next question was the XLE. This is the energy sector. Yeah, you know, I spoke about this the other day. I looked at the OIH. Remember the OIH? Kind of the same thing. Look, same thing, same chart, lousy charts. It's under OIH. The oil. These guys are all under pressure. XOM probably up today, down 68. Yeah, these are all under pressure. And I'm just saying, for now, there are better ways to deal with this market. Would I short? Wow, you know, Exxon going from the 89s down to the 74s. Would I short it now? I'm going to suggest to you that if it is a short, you have to do it in 3 stages. You short right now. You short again at 78, 75.50. You short again at 78.60. And maybe you can have another, and all smallish positions because you've missed the best opportunity. Maybe just at 81. So that's 6 points, is 9% on your first position. The reason why I'm saying, because the 200-period moving average of 71, just 4 points down, looks really enticing. It's hit it once at 66.55 back in 2015. Exxon could do that again. So would I do it? I think there's just much better trades out there. I would much rather see Exxon go down 3 points and then say, aha, as a dividend stock, now I'm prepared to give it that 4% or whatever the dividend is. So if a question is, would I look at some gold stocks? Yeah, sure. Look, gold, GG, a very nice leg, B to the upside. Horrible weekly chart, lousy monthly chart. This is Gold Core, Rand Gold. Rand Gold, nice candle today. This is one of the better looking stocks altogether. Royal Gold, sorry, not Rand, it's Royal Gold. This is one of the better looking stocks. Peak C in the monthly, holding the 9-period moving average, $84.96. This is one of the better stocks to be holding, I think, as a longer-term play. My favorite is always to look at ASA. We were going to get back into it the other day. We didn't. It's having a fabulous day of 3.84, up 41 cents at 11.08. These are South African stocks, but I think it's registered in Bermuda. Monthly chart's lousy. Weekly chart's lousy, but it's improving because of this fantastic candle today. Yeah, this is all for me. This is balanced territory at this particular time. GSS, I was asked about. GSS is, what is that? Gold State Resources. Yep, nice, 0.76, it's up.
You don't buy into that nonsense, do you? You know, you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Final questions. So what's my bias in the portfolio for subscribers? We still have our short positions. We're taking very nice profits, have short positions left. We've added a number of long positions. I don't really know what to say other than the reason for adding strongly to the Dow long position that we started on Friday, lost 0.8%, less than 1% because it was just a little early, but we finally got back in Monday. The reason is that the volatility index is suggesting that there's buying pressure. I, at this point, have two ideas about what's going to happen. One is based on price, one is based on time. And I just want to let things run. I don't want to get in the way of my thinking. And it's very easy to do that. You can overthink and you just trap yourself. So all I'm saying is that, yes, there's an upward bias. It is selective in certain cases. That is, even within sectors, some stocks are moving, some are not. I prefer right now to try to keep it as simple as possible. Yes, we still have an infrastructure play. That one is just went positive. That's good. And we have a number of positions that actually still have General Motors, if you can believe it. The General Motors position trading at 41.67. We're in 34s. Yeah, that's the way it is. And our bank stock is doing very nicely. I might even want to add, I don't want to get overburdened to the upside, but I do want to place us in different sectors, and that's really what I've been trying to do. Missed our entry into the steel, and steel's looking very good. That's a shame, but we'll get there. So I just wanted to cover that and just say one of the things I try to do in my portfolio for subscribers is I have a really diverse range of prices and instruments. So you can go from the one we just got at $1.68, trading at $1.79 right now, or you can go to something that is trading at $244. That's the way it is. I'll be back tomorrow. Stay tuned for Steve Rose and all the other great guests here at TFNN. Have a great day. Check out my opening call, front page of TFNN. Be back tomorrow. Have a great day.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.